Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Thursday, March the 3rd, a little over 5 minutes after market close here in Jacksonville, Florida, 4:07 p.m. Eastern time to be exact. And today we saw the indices get rejected at a key level. It had a pretty optimistic close, somewhat of a small gap up going into the close that really got rejected hard. Very volatile day, but ultimately ended up not so great. So indices rejected at key levels. We're going to look at those key levels and talk about those. And news-driven volatility continues to impact the market on a day-to-day basis. We're going to look at some intraday charts of both the S&P and the Qs and kind of show you what I'm talking about in that regard. So what just happened, like I just said, QQQ, SPY, as well as other indices rejected at key moving averages, but the Qs and the S&P rejected at the 21 EMA, which, as we know, very important. We discuss it quite often. Volatile trading persists. Performance-wise, the G6, the big-time loser of the bunch, down 2.22%, and really ARKK dragging those other funds down by a good bit. ARKK down about 6.5% today. The other G6 funds closer to down about 2%. S&P finished the day down about 0.5%. QQQ down roughly 1.5%. Dow Jones Industrial Average down 0.29, midcaps down 0.83, Russell 2000 down 1.3, 60/40 down 0.61, and Grotection flat on the day as we are in cash. So we're about to get to the tail of the tape here in just a moment, but before we do, as we usually do, let's discuss market state. No changes here, given even though we had some poor action today, still holding the lows from that initial rally day. So we're still in consolidation, although it is a volatile consolidation. Rally day 6. Trend gauge, there is no changes necessarily here either. We're still kind of in the same position that we have been for the better part of this week in regards to moving averages. In that sense, I mean, getting back over them. We're kind of still just meandering below, trying to get above, but getting rejected in today's example. So no changes to the trend gauge. And real quick, before we get to the tail of the tape, let me highlight Revere like I normally do. This is me here in the middle. If you have any questions, send me an email. If you're interested in what we do, what our approach is, etc., you can email me or anybody here, Dan, Tim, Merrill, or Don at revereasset.com. So let's get right into the tail of the tape. So let me move this over just a tad here for you. Market state, we touched on that, still the same. Headwinds also remain the same. Rising dollar, inflation, the Fed's tapering, what their policy is, what's going to happen with interest rates, which we got some interesting developments on. We're going to talk about on Wednesday, and then Russia, Ukraine, again, taking the front and center today, as well as we got a big spike on some news coming out of Ukraine today, or out of Russia and Ukraine ordeal. Sentiment-wise, we're kind of in the same boat, really. Put call continues to stay roughly around to slightly above 0.9. It's been doing that for the better part of this week. For the better part of this year, it's been roughly around 1, if not higher. So CPC really kind of staying roughly around the same area, between 0.9 and 1. VIX, relatively muted today, which is surprising on a very volatile day, but excuse me, basically flat on the day. It did pull back off of the highs. Highs were around 32 on the VIX today, but really not anything absurd here with the VIX. You didn't see, for example, the Dow and the S&P didn't have large drops, more so just volatile intraday charts. Fear and greed, 21, still in an extreme fear state. So sentiment-wise, we're still on the very negative side of things, but that doesn't always mean that a rally is around the corner. Bull case, as Don has talked about this, and exhaustion initiated the rally. We had that, but still have not reclaimed those key moving averages, rejected at the 21 EMA, a very key moving average today. Bear case, as Don has pointed out before, we broke back below on 217. News today, we had an Iran deal rumor, which we've had news of this in the past couple of weeks or so. But that hit crude. We saw a big pullback in crude oil, as well as a lot of the oil stocks. Most of those recovered relatively nicely by the end of the day. We had a big spike, like I mentioned, right around lunchtime here, 12:30-ish, on news of further peace talks and potential ceasefire out of Russia and Ukraine. So although that really didn't end up holding up all that well as the day wore on, and we're going to look at that here in just a moment. As far as watching today, we wanted to see what would the S&P and the Qs do if as they got up into the overhead 21 EMA, as well as just key levels in general. So that's going to be roughly 4,400 on the S&P and 350 on QQQ. So we got briefly above right at the open, very quick failure. And then as the day wore on, we had 3 retests really to try and reclaim, get back above that 4,400 level, and we're not able to do it. Action-wise, I mentioned very volatile, and I'm going to illustrate this here to you on a chart. And I know it doesn't seem all that wild when you look at, oh, we opened up 0.5% and we closed down 0.5%, but there's a lot more to the story than that. So action, we open up 0.55%, reverse to red, and this PP4355, that stands for the Powell pivot 4355. So yesterday, we had a big move above 4355 as we got news that Powell was essentially relaying a 25 basis point hike in this upcoming FOMC meeting as opposed to a 50. So that propelled the markets higher. But that's what you mean when that's what we're talking about when we talk about this 4355 level. So reversal to red, we kind of hold up there. And then that's when we get the lunchtime spike to green. And we try to get back above the 21, try and stay green, but we ultimately have a poor close. So real quickly, I'm going to come back to the tail of the tape, but I want to show you a 5-minute of the S&P so I can kind of illustrate what I'm talking about here. So this is the S&P, and this is going to be that 4,400 level. Actually, I'm sorry, I'm on SPY, which is going to be pretty similar. Here we go, S&P 500. So 5-minute on the S&P, as you can see, briefly above, just here for the first 15 or 20 minutes ago or so of the day. And then we have a pretty much frozen rope all the way from 44.16 to 43.45. And we begin to have a little bit of a bounce here, as you can see, but this is the spike, 12.35 right here, like Don had mentioned earlier, like I mentioned on the tail of the tape. And we spike back up to 4,400, can't get back above it, try-ish right here, get to 43.95, come back down, and then one more attempt, can't quite clear it, and we end up falling off into the close, bouncing off the lows a little, but altogether just a poor finish to the day. So just wanted to show you a little bit of the intraday volatility here. So we had a gap up overnight over on some news that came out, economic news this morning, jobless claims and things of that nature, ran through this level and then just pretty immediately shot back down and ultimately finished with a poor day here in the market. So I just wanted to show you that there on an actual intraday chart so you could see kind of what I was meaning by just the volatility we saw on an intraday basis, the spikes, and those spikes are what I mean by news-driven risk, news-driven volatility in the market. That was, for example, on QQQ, and we'll look at this in a moment too, that spike at 12.35 caused about a 1% move upwards in about 5 minutes of trading, which is a very quick move up, as you can imagine. So performance-wise, we went through all this already. Opened up 0.55, closed down. G6, the big laggard. Portfolio, beta stayed the same. We're still in cash. Sector-wise, this tells the story of the day. Staples, utilities, healthcare, real estate, some of the top performing sectors of the day, transportation and bonds as well. But usually when XLP and XLU are outperforming, that is typically a sign that the G6 is going to be underperforming, which is what we saw today. We had oils get hit today. We mentioned that with the Iran deal stuff. Semiconductors weak today, software, solar, and bio. So the risk on, this is very risk on with the exception of oil here, weak today. And that is something that we've been dealing with for the better part of this year is those sectors like stocks, for example, living under the 200-day right now. Software has had a rough year as it is. So these sectors here, these risk on, they've been in the doghouse and kind of staying right there for the time being. As far as key levels go, we know the breakout range, we know the all-time high range, and we're living below those now, right? But we are seeing that declining 50 continue to move lower. As you can see here, 45.37 was closer to 45.50 earlier this week when I did the Monday video. The 200-day and 40-week still kind of staying the same, flat to slightly increasing. 44.65 is your 200-day here, 44.78 is that 40-week, and the declining 21, 44.06 roughly here, but it is vastly or quickly approaching that 4,400 level, and that is the area where we were essentially rejected today, more or less this 4,400 area. So prior close yesterday, that was your broad rally on light volume triggered by the Powell pivot there at 43.55, and today's close 43.63, just poor action as the day went on. It looked good this morning, ended up reversing very hard, and then some news-driven volatility ultimately leads to a lower close. So let's get into the charts and go through this here. So S&P, I pretty much ran through this one already, but as you can see, rejected at that overhead 21E and right back into the middle of this congestion area here, sitting right on the 8-day. You really have to see this level here needs to hold. If this is broken, that is not a good sign, and it's going to look very similar on the Qs. So this area right here, call it more or less 4,300-ish on the S&P, is really where this needs to at least find its footing. You don't want to see that area broken. On the Qs, sorry, if I can type correctly here, QQQ, that same area for QQQ is basically the 340-ish area, right? So you want to see that 340 area hold. We came all the way back to it today. We actually did not make a lower low today by just a few cents, but back below the 8 after a nasty rejection. This was a very volatile day for QQQ. I'll show you a 5-minute here so you can see this as well. This doesn't even show you the real peak, because right before the market opened, this was actually up near 351. And similarly to the S&P, pretty much a straight shot down as the day wore on. Really some nasty swings, some ugly volatility here on QQQ on an intraday basis. So QQQ key level 340. You could also use this 338 area as well. There's a fib there, very important spot. So roughly 338 to 340 needs to hold on QQQ. Conversely, you want to see a move above today's high on the Qs, on the S&P, on whatever the index is or stock you're looking at. A move above today's high would be a positive. Breaking these lows here from the last 3, 4, 5 days, a negative. S&P, oops, sorry, not S&P, DIA, excuse me. Really similar to pretty much everything you're going to see here. Back into the middle of the congestion zone, kind of the last 4 or 5 days consolidation here. After getting rejected at the overhead 21, right back to the 8-day. Same story. You want to see these lows as of recent hold for DIA. And IWM, I want to show a weekly chart here on IWM, and I will in just a moment. Clinging for dear life to this 200 level, which is a really important spot, as you can see here, just looking all the way back across the chart, trying its best to hang on here. But I do want to show you a weekly here of IWM, because you can see this 10-week operating as clear resistance for the time being. So if you're looking for a positive change in character, maybe that first move above this 10-week moving average, since it can't do that, or it hasn't been able to do that yet. But it is just something to note here. This is clear resistance, this 10-week line on IWM. And you're also going to see the same thing on mid caps, MDY. So MDY, pretty much the same pattern, more or less, over the last couple of weeks as IWM. It actually is still above the 21, MDY is, but not by much. And I want to show you a weekly of MDY quickly too before we move on. Same story, kind of unable to really get going above that 10-week. That's a little orange line you can see there, sloping downwards on MDY there. So very quickly, we're going to take a look at yields, the 10-year note in particular, because we have talked about this, and you can see this previous resistance, 1.7-ish area, it looks like turned to support for the time being. We got a big move back up, and so now we're kind of digesting all this crazy volatility that we've seen in yields over the last 3 or 4 days, but digesting that above these previous highs of 1.7. So relatively important note there on 10-year yield. Let's get to some stocks. Let's look at some of the stuff that actually showed big time relative strength today. And I know this does not look good, but it held up much better than the other EPS gapper this morning, Box, which finished pretty poorly today. So PSTG, really big deal to get back above this 30 level, and it's trying its hardest to do that. Obviously, it pulled back in pretty nasty with the market off the highs of the day, but held its move, at least the majority of its move was up about 13 or 14% pre-market, and staying above this 29-ish 30 level here. So PSTG, a gap up of the day. ZIM, the shipping company, we've talked about this one a good bit, up 5% today, had a really nasty shakeout here below the 21, more or less to the 50, and right back up and off to the races, close to all-time highs on ZIM. BTU, a coal company, just absolutely getting a little parabolic here over the last 4 days has gone from 14.34 at the low on 225 to $23 here today. So a lot of the commodity stuff getting very volatile and wider ATRs as it has these explosive moves to the upside like you see here on BTU. The Chem Ag group continues to be strong and again very extended. NTR, as you can see here, continuing its strength, and MOS, same story, continuing their strength. Very, very vertical, very extended at this point, however. John Deere was showing relative strength today. This is a name that's had a pretty big amount of volume come back into it over the last 5 days after a nasty sell-off. Really a tough chart to deal with here, as this is more or less a V-shaped recovery, but relative strength today. BRKB, another name that had relative strength today, up about 1.3%, and as you can see, pushing above these recent highs as well. And UPS, a big name off the 200, was showing strength in the day and still did, finished green, but right back into these moving averages. It got above the 50, the 21, all that good stuff, and confirmed that today. A nice close above it. So UPS potentially shaping up after filling the gap right here on this earnings gap. And last positive stuff of the day before we get to some of the bad stuff, top performing sectors, like I said, XLU, XLP. These are your safe haven sectors. You also had XLRE having a decent day, and XME, metals and mining, having a good day too. So this is another one of those that's super extended to the upside here. So as far as the bad, and maybe this is the most important stock to the overall market right now, Tesla looked like it was about to have a big change in character in a positive way. And by that, I mean closing above the 21 for the first time in really more or less since the year started. It sold off here right at the beginning of the year, but hasn't closed above the 21 for the better part of 2 months. And it looked like we were potentially going to get that. And again, a nasty rejection, just like we saw in the indices. So Tesla, unable to close above the 21, at least at this point, back below the 8 and right on this 200-day moving average. Excuse me. AMD, similar story. Looked like maybe it was going to have a nice bounce here off of the 200-day, get back above the 21, but rejected today at that 21, unable to get over it, and back now below the 200, back below the 8. Net, a recent hot name because of the cybersecurity strength, down about 14% today. We also had some of the other cybersecurity names. I'll just show you a few here, not having a good day today. So CrowdStrike, another one that had been hot, down 5%. PanW did hold in there pretty well, down 1.5% today. Most of the other cybersecurity is much weaker today. A few more here. Snow had a really bad gap down on earnings. This is a data-related company, and that adversely impacted Datadog, another stock that looked like it was potentially setting up to, from a long standpoint. Yesterday, you can see here a great bounce off the 50, back above the 21, back above the 8, but down 10% today. Just a microcosm of the market that we are in. If you look at the way this has traded the last 5 or 6 days, just some really volatile trading. Not just in individual names, but on the indices as well. Cryptocurrency, not having a really good day today, as that has been one of the leading asset classes. But as you can see here, BITO had gotten back above these moving averages, pulling back in now. It's an important level to watch here on Bitcoin. If you're looking at the actual Bitcoin, that 40,000 level is really where you want to see that stay above at the bare minimum. A few more here. Boeing, really having a tough go of it, just didn't really participate in the aerospace and defense strength that we've seen in other names, and was weaker than the other aerospace names today. So Boeing continues to be a dog. ARKK, much weaker than the other G6 components today. Like I said, down almost 7%, 6.5% here. Just very, very weak. And lastly, biotechs, consumer discretionary, just some of the worst performing sectors today. I know we also mentioned stocks as well as, which is semiconductors and your software, that kind of stuff. So a lot of the risk on stuff that had a really good bounce yesterday, for example, like Datadog, or like IGV here in this case, not having a good day today. So the strength today is in staples, utilities, a lot more of the value-oriented names like John Deere, Berkshire, and the weakness is in names like Tesla, AMD, Snow, Datadog, etc. So that is going to wrap up today's video. I will see you all on the podcast tomorrow, and I will see you on next Monday's video. So have a great weekend, everybody.